Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today's Friday, April 26, 2024. The PCE data coming out today came out basically as expected, slightly hotter PCE year over year. And the core, again, slightly higher than expected, but flat, same as last month in the core, and a little higher in the regular. Markets were getting very tense going into this data, and it came out and the market had a big sigh of relief. Yields went down, stocks went up. But why did that happen? It was hotter than expected. Well, the way I look at it is, especially looking at the 30-year Treasury bond yield, like I said yesterday, it was like preparing for the worst news possible, like super, super hot PCE data, and we didn't get that. And so that's what I see as why things played out the way they did today. It's important that I add, yesterday I said I was looking in my crystal ball and I saw the PCE data coming in cooler than expected, but who can predict that? It's not like I'm the guy, I was smudgy. It was, I gotta clean it every once in a while. What can I do? Doing my best. For the day, the S&P 500 was up about 1%. Pretty big move up today, but not big enough for this trend and this pattern to break down. On a weekly time frame, it's Friday, which means it's the end of this candle. It may seem like dates are somewhat arbitrary, but people are arbitrary. Emotions are arbitrary. We have time periods in our minds, and markets, remember, they're a voting machine. They're not a weighing machine. This is controlled by people. So the weekly time frame, it does matter. It does have significance. Our three black crows here, we had an inside day after a bearish move, which means it is expected that this will continue downward. Now, if we had broken above this last candle here, I might think otherwise. Today's move in the stock markets do not give me confidence that we're returning to a bull market here. Most notable evidence that I have for this is, again, the HYT Fund. This is a fund of bonds which represent money that is borrowed by smaller companies that have to pay higher yields. It represents the chances of them defaulting on their debt or perhaps going bankrupt. Now, today's candle, very interesting. I have been talking about, if you've been listening to my shows, the bottom of this first red candle that set off these three larger candles here, being another three black crows. We literally hit the bottom of this candle exactly today at the top of, so in the middle of the day, we hit it and we backed off. So for me, this is a confirmation that we tested it, we backed off. There's a lot of resistance here. It's expected that this will continue going down from here. Next is the 30-year Treasury bond yield, guaranteed bonds sold by the United States. They're fully backed by the full credit of the United States. This is the safety play. So when money goes into here, the yield goes down, the value of bonds goes up. I had been talking about yesterday, it seemed like it was a last gasp of air yesterday for the yields. I think that, and again, I said I might be repeating myself here, but I still think that we've been topped out in yields. I'm expecting yields to go down, and I'm expecting bonds to do well moving forward. I want to mention in the triple Qs, this represents the NASDAQ. This is a chart of the weekly frame. Also an inside candle of this large red candle, which means it's more bearish than it's bullish at this point as well. Same thing in semiconductors. Again, weekly chart. Each candle is 1 week, inside week. Stocks rose, but we're still in fear mode. It was a little bit of a sigh of relief today, more than anything. And I think it mostly has to do with yields. You know, it's ironic because when yields are going down with treasuries, it puts pressure off of companies to have to pay as much debt, and so the value of stocks are allowed to go up. However, you know, when people are selling stocks because they're worried about them losing value, a slowing economy, and all of that, money can go into treasuries, and actually that money going into treasuries lowers the yield. So it has a very circly effect to it that's very confusing. But yeah, so today's PCE data, it gave the bond market a sigh of relief. It gave the stock market a sigh of relief. Briefly, again, I'm bearish on stocks right now, and I'm bullish on bonds. This is the VIX, V-I-X, the fear index based on the prices of options contracts. I have been talking ever since this candle on Monday. I was saying it looks like we might be breaking down to this line, and that has remained true so far. We are still headed down to this line. I think we might hit it and then go back up and test a new high in the VIX here. But who am I? What do I know? It's not like I'm the guy with the crystal ball. Last two charts, China's getting a bid here. We haven't seen a price this high in KWEB since November of 2023. And pattern-wise, this is starting to look quite bullish. Investors seem less fearful in China. As I mentioned in many previous shows, this entire ETF, it's a collection of stocks basically holding the holdings of KWEB. KWEB are like Amazon and Facebook and all the internet companies of China. If you go all the way back to the beginning of this fund in 2013, we're at the same price that it was then, as if this is the same value all while inflation is going up. Still, in my opinion, a very, very undervalued market. Probably one of the most undervalued markets in there. One of the more ones I'm excited about. I'm about 10% of my portfolio, by the way, in China, mostly in this fund, KWEB. So as you can imagine, I was pretty happy. I've been pretty happy lately, seeing this rise up. The only other market of interest, copper, breaking out. So we have a bull flag, a bull flag, very clear bull flag, and a breakout. So this wants to go higher. China, part of the reason is China. When the Chinese economy is doing well, copper is expected to do well as well. They are a big part of the copper market. That's all for today. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.